Liability insurance is a part of the general insurance system of risk financing to protect the purchaser, the insured, from the risks of liabilities imposed by lawsuits and similar claims. It protects the insured in the event he or she is sued for claims that come within the coverage of the insurance policy. Originally, individual companies that faced a common peril formed a group and created a self-help fund out of which to pay compensation should any member incur loss. In other words, a mutual insurance arrangement. The modern system relies on dedicated carriers, usually for profit, to offer protection against specified perils in consideration of a premium. Liability insurance is designed to offer specific protection against third-party insurance claims, that is, payment is not typically made to the insured, but rather to someone suffering loss who is not a party to the insurance contract. In general, damage caused intentionally as well as contractual liability are not covered under liability insurance policies. When a claim is made, the insurance carrier has the duty and right to defend the insured. The legal costs of a defense normally do not affect policy limits unless the policy expressly states otherwise. This default rule is useful because defense costs tend to soar when cases go to trial. In many cases, the defense portion of the policy is actually more valuable than the insurance, as in complicated cases, the cost of defending the case might be more than the amount being claimed, especially in so-called nuisance cases where there is no liability but the case has to be defended anyway. Commercial liability is an important segment for the insurance industry. With premium income of $160 billion in 2013, it accounted for 10% of global non-life premiums of $1,550 billion, or 23% of the global commercial lines premiums. Liability insurance is far more prevalent in the advanced than emerging markets. The advanced markets accounted for 93% of global liability premiums in 2013, while their share of global non-life premiums was 79%. The U.S. is by far the largest market, with 51% of the global liability premiums written in 2013. This is due to the size of the U.S. economy and high penetration of liability insurance, 0.5% of GDP. In 2013, U.S. businesses spent $84 billion on commercial liability covers, of which $50 billion was on general liability, including $12 billion for errors and omissions (E&O) and $5.4 billion for directors and officers (D&O). U.S. businesses spent another $13 billion on the liability portion of commercial multi-peril policies, $9.5 billion for medical malpractice, and $3 billion for product liability covers. The UK is the world's second largest market for liability insurance, with $9.9 billion of liability premiums in 2013. The largest sub-line of business is public and product liability. This is followed by professional indemnity and employer's liability cover for employment-related accidents and illnesses. There has been a significant shift in the subsegments of UK liability insurance. In the last decade, the share of professional indemnity has increased from about 14% to 32%, highlighting the shift towards a more services-driven economy. Manufacturing, meanwhile, comprises a lower share of liability claims as accidents related to injuries and property damages have declined. In continental Europe, the largest liability insurance markets are Germany, France, Italy and Spain. Together they made up almost $22 billion of global liability premiums in 2013. Typically governed by civil law systems, these markets rely on local conditions and historical experience to determine which liability policies and covers are available. Penetration ranges from 0.16% to 0.25%, which is low compared to the common law countries such as the US, the UK and Australia. Japan and Australia are the largest markets in the Asia-Pacific region, with commercial liability premiums of $6 billion and $4.8 billion, respectively, in 2013. At 0.12% of GDP, the penetration of liability insurance in Japan is much lower than in other advanced economies. In Australia, penetration is much higher at 0.32% of GDP. This is due to the country's English law-derived legal framework, which has increased demand for employers' liability insurance. Australia has mandatory covers for aviation, maritime oil pollution and residential construction and, in certain states, for medical practitioners, property brokers and stockbrokers. Liability insurance premiums have grown at an average annual rate of 11% since 2000. China is the 9th largest commercial liability market globally, with premiums of $3.5 billion in 2013 and strong annual average growth of 22% since 2000. However, penetration remains low at 0.04% of GDP. Growth has been driven by increasing risk awareness and regulatory changes.